Welcome back to Investing Talk Podcast. Today, we're going to crack open a company that's been making some serious waves, both good and bad.
Yeah. You know that feeling like when you're on a beach, sipping a Corona Life is good, but then out of nowhere, a storm rolls in?
Haha. Yeah, that's kind of where Constellation Brands is right now.
It's a really fascinating case study. They've got this incredible success story with Modelo Especial.
Right.
But then on the other side, you've got this massive question mark hanging over their heads.
Yeah,
Is their huge bet on cannabis going to end up paying off, or is it going to drag them down?
exactly. And we can't forget about those tariffs on Mexican imports that are still looming out there.
Right.
That could be a total game changer for a company that's making 70% of its beer south of the border.
Yeah, for sure. It's a lot to unpack. So let's start with the good news.
Okay.
Modelo Especial has just been absolutely crushing it.
Yeah.
Did you know it actually just passed Bud Light as the top-selling beer in the U.S.?
By dollar sales?
Yeah, by dollar sales.
I did. It's amazing.
Yeah.
It's a testament to their ability to just understand what consumers want.
Yeah, they're riding that wave of premiumization. People are willing to pay a little bit extra for a higher quality beer.
Yep, and it's not even just Modelo Special.
Right.
Modelo Gelada is also seeing some huge growth, especially among younger, health-conscious drinkers.
Right. In a market where overall beer sales are down, that's really impressive.
It really is. But here's where things start to get a little bit murky.
Okay.
Remember back in 2018 when Constellation Brands made that $5 billion investment in Canopy Growth, the cannabis producer?
Oh, yeah.
Well, that hasn't exactly been a walk in the park.
Not at all. Canopy Growth is still struggling to actually turn a profit.
Really?
Yeah. In fact, they just posted a $58 million free cash flow loss.
Wow.
And there's been this ongoing dilution of their stock ticker symbol, CGC.
Oof.
That's not really giving investors a lot of confidence.
I can imagine. And that's definitely weighing on Constellation Brands' stock ticker symbol STZ,
Yeah.
which has taken a hit, dropping 60 points since December 2024.
Yeah.
It's actually hovering right above its 52-week low right now.
So the big question is this cannabis venture going to be their downfall, or isn't their beer business strong enough to carry the weight?
Yeah, that's what we're here to try to figure out.
Exactly.
But before we dive into that,
Okay.
there's another huge factor, and we got to talk about those potential tariffs on Mexican imports.
Right. That's the elephant in the room. If those tariffs actually go into effect, it could mean a 16% increase in Constellation's cost of goods sold,
Wow.
which would definitely impact their profitability, especially in this super competitive market.
And we can't forget about Anheuser-Busch InBev, ticker symbol BUD.
Right.
They're breathing down Constellation's neck, fighting to get that market share back.
Yeah, they're already slashing prices on all their products, so it's not even clear if Constellation Brands could raise their own prices to offset those potential tariff costs. Yeah, it's a really tough spot to be in. And to make matters worse, there's just a ton of uncertainty around these tariffs.
Yeah.
No one really knows for sure if they'll actually happen or what the final percentage will even be.
Right.
Some analysts are saying the worst case scenario is a 25% tariff, which could wipe out $1.2 billion in annual EBITDA for Constellation Brands.
Okay, so we've got these cannabis losses on one side and the looming threat of tariffs on the other. What about their overall financial health?
Right.
Are they in a good spot to actually weather these storms?
Well, their recent Q2 2025 performance was kind of a mixed bag.
Okay.
On the one hand, they had revenue growth, which is obviously good. But on the other hand, their profit margins are pretty thin, only 3.8%.
Yeah, and that makes me wonder, can they actually keep up the cost-cutting measures they've put in place if things get worse with these potential tariffs and rising input costs?
Yeah, that's a valid concern. They're currently offering a 2.39% dividend yield,
Okay.
which is pretty attractive to income-oriented investors.
Right.
But if those profits take a hit, that dividend could be at risk.
So not exactly a picture of perfect health, huh?
Not entirely, but it's not all doom and gloom either. Constellation Brands is making some strategic moves beyond just beer to diversify their portfolio and adapt to the way things are changing.
Okay, like what?
Well, for instance, they're expanding into the Asia-Pacific markets,
Interesting.
especially through a partnership with China Resources Beer.
Okay, that's a good move. Tapping into those growing markets could be a big win for them.
Definitely. And they're also putting money into their e-commerce platform to reach those younger tech-savvy consumers.
Yeah, absolutely. And we can't forget about their push into non-alcoholic beer and ready-to-drink cocktails.
Right.
That Corona Zero pilot launch in Texas and Florida is already taking market share, even outperforming Budweiser Zero.
And with that RTD cocktail market booming, their $200 million investment in that space could really pay off.
Right, they're using their existing distribution network and that brand recognition to get into that fast-growing market.
Yeah, it's a smart move, but the question is, are these initiatives enough to offset the risks they're facing with the cannabis stuff and those possible tariffs?
Right, that's what we're going to be looking at in part 2.
Exactly.
We'll take a closer look at their valuation and analyze some potential scenarios.
Yeah.
And try to answer that million-dollar question is, Constellation Brands stock a buy or a bust?
So grab another beer or maybe a non-alcoholic option and stay tuned. We'll be right back. Welcome back to Investing Talk Podcast.
All right, so before we dive into these choppy waters we were talking about,
Yeah.
what is Wall Street's take on Constellation Brands right now?
Well, the sentiment's kind of mixed. Some analysts are looking at this drop in price as like a buying opportunity.
Okay.
They're pointing to that $5 billion market cap and that impressive revenue growth as signs of some underlying value.
That makes sense. But we were also talking about those thin profit margins.
Right.
And the debt they're carrying.
Exactly. And that's what's making some investors a little hesitant.
Right.
Their debt load is pretty big.
Yeah?
Which makes them kind of vulnerable to things like interest rate hikes.
Okay.
That's definitely something to think about.
Okay, so there's a lot of uncertainty swirling around this stock. Let's play devil's advocate for a minute.
Okay.
What if those tariffs on Mexican imports actually do happen?
Right.
What's the worst case scenario for Constellation Brands?
Well, if those tariffs hit, it could be a real blow to their bottom line.
Yeah.
We could be talking about a drop in earnings per share of like $1.20 to $1.50.
Wow.
That's a pretty significant chunk of change.
Ouch. And that would probably put pressure on them to cut that dividend they're offering, right?
Yeah, most likely. And if Canopy growth keeps struggling,
Right.
they might have to write down even more of that investment.
Right.
And that would just make investors even more nervous and could push the stock price even lower.
So not a pretty picture? But let's flip the script for a second.
Okay.
What if those tariffs don't happen?
Right.
What if things start looking up for Constellation Brands?
Well, in that case, the stock could see a pretty nice rebound.
Okay.
Some analysts think that a permanent tariff exemption on Mexican beer
Okay.
could boost the stock price by 15 to 20%.
Wow, that's a big jump,
Yeah, it's a pretty significant jump. I remember Modelo's still doing really well.
right?
Some analysts think they could grab 30% of the U.S. beer market by 2026.
Wow.
If they can keep riding that wave, they'll be in a really strong position.
Yeah, they're definitely on a roll. And if they can use that strong free cash flow that they're generating
Right.
to pay down their debt,
Yeah,
that'll make them even more attractive to investors.
exactly. They're shooting for a much healthier debt level by 2026,
Okay.
which would be a big improvement.
Okay, so we've got these two very different potential paths.
Right.
A tariff-laden nightmare versus a bright future fueled by Modelo and strategic expansion.
Yeah.
What are some of the key factors investors should be watching
Okay.
to see which way the wind is blowing?
Well, obviously, any news about those tariffs is going to be super important.
Of course.
Just keep an eye on how the Biden administration is approaching trade with Mexico.
Yeah.
That'll give us some clues. And then there's consumer behavior.
Right.
Are people going to keep paying extra for brands like Modelo?
Right.
Or is inflation and the economy going to make them switch to cheaper beer?
That's a good question.
That's a big question mark.
Yeah.
Constellation Brands is betting big on those premium brands, so if people start spending less, it could really impact them.
And what about that Canopy growth situation?
Right.
Any signs of a turnaround there, or is that still dragging them down?
Keep an eye on their earnings reports and any announcements about the cannabis industry. If there's a clear path to profitability for Canopy growth, that would help investors feel better.
Yeah.
For Constellation Brands, it all comes down to whether that $5 billion bet is eventually going to pay off.
Okay, so a lot of moving pieces here.
Definitely.
You've got those big picture things like trade policy and what consumers are doing.
Right.
And then those company-specific things like their debt and how their cannabis investment is doing.
Yeah, it's a complicated situation, but that's what makes investing so interesting.
Right.
You've got to look at all these different factors and make a good decision.
Exactly. So let's try to put all this information together.
Okay.
If you're an investor listening right now, what are the key takeaways from our talk about Constellation Brands?
Well, I think the biggest thing is that Constellation Brands is at a crossroads.
Okay.
They have a really strong business with some exciting growth opportunities.
Right.
But those risks, especially those tariffs, are a big deal.
Yeah, it's like they're walking a tightrope
Yeah.
between success and disaster.
Exactly.
They're doing a great job with that whole premiumization trend.
Right.
But they could totally stumble if those tariffs happen or if that cannabis investment keeps dragging them down.
Exactly. So is this a buying opportunity or a trap?
Right.
That's the million-dollar question we'll try to answer in the last part of our show.
Yeah, we'll take a closer look at their valuation,
Right.
look at some different investment scenarios,
Yeah.
and try to help you figure out if Constellation Brands is a stock you should buy or avoid like the plague.
Stay tuned because we're about to give you the verdict. We'll be right back.
Welcome back to Investing Those Podcasts. We've spent the last two parts breaking down Constellation Brands.
Yeah.
Now it's time for the big question.
Yeah,
Is this stock a buy?
right.
Or should investors just stay away?
The million-dollar question. It's been quite a ride analyzing their strengths and their weaknesses.
Yeah, so let's just cut to the chase. Is Constellation Brands a buy right now?
Well, if I could see the future, I'd be on a beach somewhere not talking about stocks.
Right.
But I can give you some things to think about based on what we've talked about.
Okay, perfect, to help you make your own decision.
Let's start with their valuation. Brands is trading near its 52-week low,
Right.
which might make it seem like a good deal.
Yeah.
But is it actually undervalued with all the risks we talked about?
Well, that's the key. We got to think about those possible tariffs, the uncertainty around their cannabis investment, and those low profit margins. All that stuff creates a lot of risk for investors.
And risk makes investors nervous.
Especially in a crazy market like we have right now.
Yeah, exactly.
And for those investors that don't like a lot of risk, it might be best to just wait and see for a little bit.
Okay.
You know, see what happens with those tariffs and if Constellation Brands can make more money before you jump in.
That's good advice. But what about investors who are okay with more risk?
Right.
You know, the ones that see opportunity when things are a little crazy.
Yeah. Well, for those investors, a price under $240 a share might be pretty tempting.
Okay.
It's kind of a gamble, but if things go their way, there's a chance for a nice return.
So it's a calculated risk. You're basically betting on them to overcome those challenges and for their plans to work out.
Exactly. You're betting on Modelo to keep doing well, their move into new markets, and their ability to come up with new stuff beyond just regular beer.
It's kind of like investing in a brand new company.
Yeah.
There's a lot of potential, but also a lot we don't know, and a chance it won't work out.
That's a great way to put it. So at the end of the day, whether you invest in Constellation Brands is up to you.
Right.
How much risk you like your investment goals, and if you believe in what they're trying to do.
Exactly. Do your own research, weigh the pros and cons,
Right.
and make a choice that fits your overall plan.
Couldn't have said it better myself. Here's something else to think about.
Okay.
Could Constellation Brands become a big name in the non-alcoholic drinks market?
That's interesting. They're definitely making moves in that direction with Corona Cero and all those ready-to-drink cocktails they're investing in.
Yeah. It's a market that's growing fast, and Constellation Brands has the name recognition and the way to get their products out there to take advantage of that trend.
Yeah, definitely. So this whole look at Constellation Brands just shows that even big companies with well-known brands need to change and come up with new ideas to stay on top.
Absolutely. Well, that's it for our deep dive into Constellation Brands. Hopefully this has given you some good things to think about when making your own investment decisions.
And remember, this is just one piece of the puzzle
Right.
when it comes to investing. Do your own research and think about all sorts of things before making a decision.
For sure. If you enjoyed this episode, make sure you subscribe to Investing Talk Podcast.
Yes.
And share it with your friends. We really appreciate you listening, and we'll see you next time.
Don't forget to leave us a comment and tell us what you think. We love hearing from our listeners.